Hey everyone, and welcome back for another deep dive. This time,
Cisco,
Cisco, that's right. We're going to figure out
if it's a buy.
if their stock, if it makes sense for your portfolio.
Absolutely.
We've got a lot to cover. I mean, we're talking financials,
There are
their
hippies.
innovations. There's even been some recent controversies.
Yeah. It's going to be fun. Understanding all those pieces, though, is key. And especially, how Cisco's history kind of shapes where they are today,
That's true.
where they're going.
Makes a big difference. So let's do a little bit of a history lesson first, right?
Absolutely.
So Cisco, as a lot of you probably already know, the name comes from San Francisco.
Mm-hmm.
And
That logo.
that iconic logo
Iconic.
is a nod to the Golden Gate Bridge.
Yeah.
But they weren't just about,
Hometown pride.
hometown pride, right?
Okay.
It was what really set them apart, I think, early on was their approach to routers.
Yeah. Way back when.
Back in the early days of the internet,
Like the Wild West.
right, all these different networks couldn't talk to each other.
And along comes Cisco.
Right. Cisco's routers were the game changer here
They were
because they could support all these different
network protocols.
network protocols.
It was like a universal translator almost.
Yeah, for the digital world, basically.
Hmm.
So fascinating, right? They had this innovative tech. They were, riding this internet wave. Fast forward to today, and the financials look pretty impressive. I mean,
Oh, yeah, they're doing well.
they had $57 billion in revenue in 2023,
Whoa.
which is a jump of over 10% from the year before,
Nice.
and a net income of $12.6 billion.
Healthy.
So that's pretty healthy, right?
Yeah, I mean, you always have to kind of look beyond
Okay.
those headline numbers. Like their stock price, for example, it's hovering around $43 a share. But we need to look at that compared to, how it's performed historically and how the overall market's doing. And you can't ignore, some recent things that have been happening, like the layoffs that they announced in February.
Yeah. Over 4,000 employees.
Over 4,000.
That's a lot.
And they also lowered their revenue forecast.
That's true.
So that's something to look into.
Yeah, it makes you realize you can't just glance at a company's revenue and be like, okay, good to go.
No,
No.
there's always
More to it.
more to it.
Yeah, it's those underlying trends and not just looking at one data point.
So let's zoom out a little bit and talk about Cisco's market position. I mean, they were, for a long time,
King of the castle.
right, undisputed king of networking.
Absolutely.
But the landscape is a lot more crowded
Right.
now. So
Different world.
how are they holding up? I mean, who are the challengers?
Yeah, I mean, it's true. They were dominant for a long time,
Mm-hmm.
but then companies like, Juniper Networks started kind of chipping away at that market share.
Oh, interesting. Back in the early 2000s. And that's what forced Cisco to become,
Even more innovative.
even more innovative. They had to push the boundaries.
And that kind of brings us to their innovation pipeline now.
Right. It does.
Okay, so they've had to adapt and evolve. What are some of the key things they're betting on right now to stay ahead of the curve?
Well, one of their biggest bets is the Silicon One chip.
Okay.
It's designed to, handle all that data that's going to be flowing through the internet in the coming years, all that, the metaverse, the AI, the Internet of Things, all of that.
So they're trying to position themselves not just as a networking company, but like a foundational building block for
The future of the internet.
the future of the internet.
Right.
Yeah.
And, whether they succeed or not really depends on how these innovations like Silicon One do.
Yeah, I mean, it's not just reacting to trends. They're trying to anticipate them. And
Shape them.
shape them, yeah.
Yep.
Okay, let's talk about acquisitions.
Oh, yeah. Cisco loves to buy companies.
They buy a lot of companies.
Yeah.
I mean, they just shelled out $28 billion for Splunk,
Whoa.
which is a data analytics company. That's a
Yeah.
big bet, right?
That is a big bet. I mean, their acquisitions have been kind of
Mixed bag.
a little bit of a mixed bag over the years. Some have been like home runs,
Nope.
like WebEx, for example, which became a household name, during the pandemic.
Right.
Others, not so much.
So how do you evaluate, I mean, if an acquisition like Splunk is going to be a good move or not? I mean, is there any way to know?
I mean, it's a tough call.
Mhm.
You have to see if the company has a strong technology, if they have a valuable customer base, if they fit in with Cisco's overall strategy.
Mm-hmm.
But there's always risks. Integration challenges, sometimes culture clashes. The market can shift unexpectedly. It's definitely something to watch carefully.
Yeah, it's a reminder that even with a company like Cisco, There's always some uncertainty.
Yeah.
You really have to do your homework, weigh the risks, the rewards.
Absolutely. And, another thing to consider is that Cisco's not just, a hardware company anymore.
Right.
They've got their services business is
Yeah.
huge, which includes, like training programs and certifications for IT professionals. It's become a major part of their revenue.
So they're not just selling boxes anymore. They're selling expertise too. And
Support. Yeah, exactly.
Support.
And that recurring revenue, that can really help the company.
Yeah, especially when things are uncertain.
Yeah, especially in times like these.
Okay, so let's switch gears a little bit and talk about their economic impact. I mean, Cisco's got a massive global presence, right? I mean, offices in over 80 countries.
Wow.
And they've really embraced remote work, allowing employees to work from anywhere. How do you see those factors kind of playing into their future?
I mean, it's an interesting dynamic. On the one hand, they've got this global reach, so they can, get talent from all over the world, tap into different markets.
Yeah.
But then, they've got to navigate all the complexities of
The global economy.
the global economy. Yeah, it's always changing.
Right. And then remote work, there's advantages, of course, lower overhead, more flexibility for the employees. But how do you maintain that company culture when everyone's all over the place?
It's a balancing act for sure. How well they manage these challenges, that's really going to impact their success in the long run.
So we've covered a lot of ground here. Cisco's origins, the financials, how they're doing in the market, the innovations, all the acquisitions they've made, the services business, their global impact. But let's get down to the nitty-gritty here, right?
Yeah.
What are the pros, the cons of actually owning Cisco stock?
All right. So let's start with the good stuff. Cisco's been around a long time, strong brand. They've got a long history of innovating. They've also got a really diversified business model with their services segment bringing in that steady revenue.
Okay, so solid foundation.
Solid foundation.
Track record of adapting.
Adapting.
But there's got to be some downsides too, right?
Of course. I mean, we've talked about how competitive it is out there.
Yeah.
And, not all of their acquisitions have been home runs.
Right.
And, there's always that risk that these big bets they're making, like Silicon One,
They don't work out.
might not pan out.
Yeah, okay. So some challenges, some uncertainty. What about dividend policy and buybacks? Those are things investors really care about.
Especially those looking for income.
Right.
Yeah, so Cisco has, been paying dividends, repurchasing their own shares consistently.
Okay.
Their current dividend, I think, is 39 cents a share every quarter. And that buyback program, that's ongoing. And that can, potentially boost the value of the remaining shares.
So they're actively trying to, return value to the shareholder. But let's not forget about ESG factors. Environmental, social, governance.
Absolutely.
How does Cisco score on those?
Well, ESG is becoming more and more important for investors these days. And, Cisco has faced some
Scrutiny, I guess.
Some scrutiny, yeah. Specifically, they were sued in California, allegations of caste-based discrimination.
Wow, that's
Yeah.
that's pretty serious.
It is.
So even though a company, looks financially strong, there's other things that investors are
Paying attention to.
paying attention to.
Yeah, it's not just about the numbers. It's about values and how a company acts in the world.
Okay, so we've covered a lot here.
Yeah.
From their, humble beginnings to their massive global footprint, Cisco's come a long way. But with all this change happening in the tech world, I mean, lightning speed, the question is,
Can they keep up?
can they keep up?
Can they innovate?
Stay ahead of the curve?
Right.
Yeah. I mean, we can't predict the future, but we can look at, their strategy.
Their strategy, their investments,
Mhm.
how well they adapt. That's where the real insights are.
Okay, so let's dive into those insights. What are the key things that investors should be watching, when it comes to Cisco's future, their potential?
Well, I think first and foremost, we got to talk about valuation.
Okay.
I mean, they might have, a solid financial performance, but if the stock price is already, kind of inflated,
Yeah.
there might not be a lot of room for it to grow, right?
So how do we figure that out? How do we know if Cisco is undervalued, overvalued?
Well, there are a couple metrics we can look at. One is the price to earnings ratio, what they call the PE ratio, and that compares, the stock price to the earnings per share. So a high PE ratio, that could mean the stock's overvalued, and a low PE ratio, maybe it's undervalued. But you got to compare it to
This is history.
the historical average.
Okay.
See how it stacks up against its competitors. It's all about context.
Context, exactly.
Yeah. What else? What are some other metrics that can help us get a feel for valuation?
Well, another important one is the price to sales ratio, PS ratio.
Okay.
And that compares the stock price to the revenue per share.
Mm-hmm.
And that one's especially useful if you're looking at companies that are growing really fast,
Okay.
but they might not be profitable yet,
Right.
Now, Cisco's profitable, but looking at that ratio can still, give you some insight, like what's the market sentiment?
Okay.
What's the future growth potential?
So we got P ratio, we got PS ratio. Are there any other tools in the valuation toolbox here?
Oh, yeah, absolutely. I mean,
Yeah.
you can also look at discounted cash flow analysis. Now, that one's a little bit more complex,
Okay.
but it tries to estimate the present value of all the future cash flows that a company is going to generate.
Mm.
So it can give you a more comprehensive view of the company's intrinsic value.
Okay.
But remember, valuation is not a perfect science.
An exact science. There's always a little bit of subjectivity involved.
Right, there's no magic formula.
Yeah.
But using those metrics, we can at least get a better sense of, is Cisco stock priced fairly?
Fairly.
Given their performance.
Your prospect.
Their prospects. Okay, so let's switch gears a little bit here. Let's talk about Cisco's services business.
Okay.
We touched on it earlier. Why? I mean, you said it's a more stable revenue stream.
Yeah.
Can you kind of expand on that? Like, why is that so important for investors to consider?
Because it's, their hardware sales, they're
Up and down.
they ebb and flow.
Yeah.
They're subject to, all the fluctuations in the tech industry. But that services business, like the support, the training, the consulting, that's
More consistent.
yeah, more predictable, less cyclical. So even if, those hardware sales slow down,
Yeah.
that services segment, that can help soften the blow
So it's almost like having a diversified portfolio
within the company.
within the company itself.
Exactly.
Okay. And that makes them less, vulnerable to all those ups and downs in the economy.
Right. And for investors, that stability, that's gold, man.
Yeah, especially.
Especially in uncertain times.
Right. Okay, so let's talk about their dividend policy, the share buybacks. We mentioned it briefly before. Can you
Yeah.
kind of break those down a little bit more, explain what they are, why are they important to investors?
All right. So a dividend, basically, it's a portion of a company's profits that they pay out to their shareholders, usually, on a quarterly basis. Share buybacks, on the other hand, that's when a company actually goes out and repurchases its own shares from the open market. And both of these, you can kind of see them as ways that a company is trying to return value
Back to the shareholders.
back to the shareholders.
Okay, so how do they actually benefit the investors?
Well, dividends, they give, that direct stream of income to shareholders, and that can be really appealing if you're looking for passive income, or maybe you're, saving for retirement, something like that. And then the buybacks, they can benefit investors by reducing the number of shares that are out there.
Okay.
And that can actually increase the value of the remaining shares.
So it could boost income and share price.
Potentially, yeah. But of course, there are always
Downsides.
There can be. I mean, some people say, hey, companies should be using their profits to invest in growth, innovation, not giving it back to the shareholders.
Mhm.
And some worry that the buybacks, they can artificially inflate the stock price. It's kind of a short-term boost
right.
that's not really sustainable.
So it's important to
We look at
understand.
the trade-offs.
Yeah, the trade-offs.
Yeah.
But, I mean, overall, Cisco's commitment to these things, it seems like a pretty good sign.
It is. It shows that, they care about shareholder value. And they've got confidence in their future cash flow. But, you always got to look at the specifics of their policies and make sure that it's, sustainable over the long haul.
Right. We can't just assume everything's perfect.
Yeah.
Okay, let's circle back to ESG factors for a minute. You mentioned that Cisco had been, under scrutiny
Yeah.
with these allegations of caste-based discrimination.
Mm-hmm.
Why is ESG becoming so important to investors these days?
Well, ESG, it stands for environmental, social, and governance, right?
Mm-hmm.
And it's this whole range of factors that
Yeah.
really speak to how a company impacts the world and all of its stakeholders.
Mhm.
And investors are starting to realize more and more that a company's ESG performance, it can really have a big impact.
On the bottom line.
Yeah, on their long-term sustainability and their profitability.
So it's not just about doing good, it's
It's about smart business.
smart business, yeah.
Exactly. I mean, companies that have strong ESG practices, they tend to be better managed. They have a stronger brand reputation, and they're less likely to get hit with, regulatory or legal problems.
Right, that makes sense.
On the other hand, if you have bad ESG performance,
Yeah.
that can damage your reputation. You could see consumer boycotts. Investors might even pull out their money.
So it's a big part of evaluating any.
Any investment, absolutely.
Okay, and in Cisco's case, these allegations, I mean, it raises some serious concerns. What should investors be thinking about here?
Well, they need to look at how Cisco's responding to these allegations. What steps are they taking to address this issue? Is there commitment to diversity and inclusion? Is it genuine?
So we're not just, looking at their numbers. We're looking
Or
at
actions? Yeah.
their values.
Yeah.
Okay. So ESG analysis, it involves kind of
Digging deeper.
understanding their culture, their leadership, their, commitment to doing the right thing.
Yeah.
So we've covered a lot of ground here. Valuation, the services business, dividends and buybacks, all the ESG factors.
Mm-hmm.
Where does this leave us? For our listeners, what's the big takeaway here? Should they buy Cisco stock?
I mean, the ultimate decision is it's up to each individual investor,
Right.
right? You got to consider your own financial goals, how much risk you're comfortable with. But hopefully we've given everyone the information and the insights they need to make
An informed decision.
a smart decision.
Right. We've tried to show you all the things to think about, the good, the bad, but there's always more to learn. We always encourage our listeners to do your own research.
Don't just take our word for it.
Exactly. And if you're interested in more deep dives on other companies or, other investing topics,
Head over to our YouTube channel.
head over to our YouTube channel. Let us know in the comments
What you want to hear about.
what you want to hear about.
Yeah.
We love to hear from our listeners. So, share your thoughts, your questions, your ideas. I mean, we're all in this together, right? We're all
Learning, exploring the crazy world of investing.
the crazy world of investing. So let's wrap up our deep dive into Cisco. But before we sign off, I have one final thought I want to leave you with.
Okay, hit me with it.
So we talked a lot about Cisco's past, their present. What about their future? I mean, the tech world is evolving so fast.
Constantly changing.
I mean, with AI, the metaverse, I mean, how is Cisco going to adapt and thrive in this kind of crazy environment?
That's the big question, isn't it? And I don't think there's an easy answer. But here's what I think. I think their future really hinges on whether they can not just adapt to change, but actually be the ones driving it.
So they can't just, keep making routers and switches like they always have.
Right. They got to be the ones building the infrastructure
Yeah.
for what's next,
Okay, yeah.
Think about the questions they should be asking themselves. I mean, what is the internet going to look like?
In the future.
10 years from now, 20 years from now? What technologies are going to power those networks?
Right.
And how can Cisco be a leader in that?
Well, it sounds like, this Silicon One chip that we were talking about, it's a step in that direction.
Right.
I mean, they're trying to get ahead of those massive data demands.
It is, but they got to keep pushing. They got to be thinking about, how to leverage things like AI
Okay.
to make those networks even smarter, more resilient.
Like those self-healing networks we talked about.
Exactly. They can predict and fix problems before they even happen.
Right.
And think about the metaverse too, which we mentioned earlier. I mean, it's still, early days.
Yeah.
But it has the potential to be this huge interconnected, virtual world.
It's crazy.
What role is Cisco going to play in building the network infrastructure to support something like that?
It's almost hard to imagine.
Yeah.
But it does highlight, the responsibility they have to really make the right bets.
Yeah, it's huge. They've got to be looking ahead, anticipating those trends and figuring out, okay, how do we capitalize on this?
So for investors, trying to decide if Cisco is right for them, for their portfolio, what are the key things to be watching here?
I think they need to look beyond, just the current financials and really understand what is Cisco's long-term vision.
Oh.
Are they Are they investing in the right technologies? Are they attracting, the top talent? Are they creating this culture of innovation, of agility? I
Yeah.
mean, those are the things that are ultimately going to decide whether they succeed or fail.
So we're not just looking at the balance sheet. We're looking at the leadership, the strategy, how well they can adapt.
Exactly. And understanding the risks and rewards. I mean, Cisco's a big company.
Uh-huh.
They've been around a while. They've got a great track record.
Yeah.
But they also have a lot of competition out there.
Right.
And they're in an industry that changes all the time.
That's true.
So there are no guarantees.
Classic, high risk,
Yeah.
high reward. But for investors that believe in their vision,
Yeah.
believe that they can, pull this off.
Yeah,
I mean, it could be a really interesting opportunity.
absolutely. And, like with any investment, do your research, understand the company, make sure it fits your goals, your risk tolerance.
Couldn't have said it better myself. And as always, we encourage our listeners to continue the conversation over on our YouTube channel. Let us know what you think about Cisco, other companies you might want us to cover, or any other investing topics that are on your mind.
Yeah, we really do love hearing from our audience, getting your feedback, your insights and questions. I mean, they really do help us shape the show and make sure we're covering the stuff that matters to you.
So thanks for joining us on this deep dive into Cisco. We hope you found it informative, maybe even a little thought-provoking.
Yeah.
And remember, in the world of investing, knowledge is power. So keep learning, keep exploring, and keep pushing those boundaries.
Until next time.